Good morning, traders. It's 8 a.m. Chicago time on Tuesday, the 27th of April, 2021. This is episode number 1981. Thanks for joining me today. I had anticipated not being here today, but turns out that other than a sore arm, I'm not getting much of an effect from the second COVID shot. So glad that's kind of on its way. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, relatively a quiet, mixed, neutral kind of trade so far. The indices did push up. The S&P pushing the all-time high at 86.75. To 41.9250 and coming back. We have a completely balanced profile. 16 and a quarter points. The overnight high is 92.50. The point of control 84 and a quarter, and the overnight low is 76. So you can see we didn't give up much territory from yesterday's completely slot kind of buy sell orgy that we saw yesterday. These V bottoms and tweezer tops again and again and again yesterday in a tight range. Just an awful trade yesterday. I'm glad I didn't lose money in it, but I feel like I got lucky. But this morning we do have a mixed bag. We've got a ton in terms of earnings. There's a lot on deck for today in key earnings. Before the open, we've had BP, Eli Lilly, 3M, Centene. These are all 3 billion plus revenue companies. BP surprised 105% to the upside, 105% on BP. Eli Lilly disappointed by 12% on earnings. 3M surprised by 21% on earnings. Centene came in line. After the close, we get Mondelez, Visa, and America Mobile. And that's what's on deck for earnings. Those are the three. I filter out the estimates by 3 billion plus. I kind of don't really pay attention to anybody below that. So that's the other thing. As far as the calendar is concerned, we just got Case-Shiller. Home prices came in pretty strong, 1.2% versus 0.8 month on month, year on year. A whopping 11.9%, which is just slightly higher than the core forecast of 11.2. We do get consumer confidence in an hour. Consumer confidence expected at 112. And then API crude stock change expecting 0.375 or 375,000 barrel surplus. And then there's a speech from Biden at some point today, according to this schedule. Not sure what time that is, but overall, little changed ahead of the Federal Reserve policy meeting and a raft of earnings from top companies, including Alphabet, Microsoft, and Starbucks later in the day. I don't know why those didn't turn up my skin. European shares were in the red as UBS became the latest bank to disclose a hit from dealing with Archegos. Asian equities ended on a mixed note, with Nikkei closing lower after disappointing quarterly updates. Oil rose ahead of the OPEC Plus meeting to discuss output policy. The dollar index and gold prices were slightly higher. That is from Refinitiv Reuters, and that's where we stand this morning. So that's what's on deck. You could see the numbers in front of you. Crypto is recovering nicely. I've been pushing higher after a big drop a week ago. And it looks like we're allocating slightly to safety with gold climbing and so on. But the treasuries are just under break even, are just under unchanged as we stand. Here's what was expected yesterday. Yesterday, given the structure that we had, I had explained that it's likely to be a low volatility day, a low range day. We did not let go of Friday's upper distribution. Um, and it looked, and 61 was the cutoff point, and it looked like we're opening on top of the overnight point of control and VWAP in mid, and it is likely to be quite choppy. I did expect it to push the overnight high, which was at 41.77, as you see there. Let me make this larger actually. 41.77, but I didn't expect it to go very far. I did expect it to challenge the high, though. We were pretty close. And what it did is it ran up a little bit before the cash open, and it sat sideways. Here's what we actually saw yesterday in our review segment. Look at that. Just, it's another day that only its mother would love. It's pretty fugly. So let's clean this up. Completely sideways. Lots of sweeps down with reversions. Um, Lots of sweeps down with reversions, back and forth, back and forth. A great day yesterday to get really emotional and frustrated with the market. I saw just one opportunity for a long early on at 41.83, which didn't go anywhere. And but other than that, it is like an oil bog. It You just couldn't get anywhere, or a tar pit. You couldn't get anywhere. It seemed to pull everybody back towards the middle repeatedly. We saw several sweeps yesterday. We saw a big sweep right in here. Big sweep, 2,500 contracts. Well, no, that was back here. About 2,500 contract sweep, and then it just comes right back up. So yesterday was really an outside in kind of day, but it's the kind of day that you don't see it's outside. It's an outside in kind of day until it's too late. So not much, not much. It's a day I'd soon like to forget in terms of just incredibly poor price discovery. The delta was flat, pricing was flat. We closed where we opened basically, and there's not much to it. However, I warned in my notes in the head trader channel last night as I was sharing my homework. I said on convergent trading, I said, given the compression we saw today in ES and the light volume, I wouldn't fade a strong move away from this zone. This is a coiling, consolidating, compressing type of market. It's completely imbalanced on the upper end of the range. So the expectation is if it starts to push directionally, it is likely to run a little bit. We did about 800,000 contracts yesterday, I believe. 837,000. You could see the day before was 1.27 million. The day before that was 1.75 million. So yesterday was a as I said, it was a profile that only a mother could love. And that's what so I end up with a very messy chart with a billion lines on it. It looks like a spaghetti factory. So it's really not not something that I can elaborate on much, other than the fact that the big things to take away from yesterday were: one, we did not move away from the high. We put in a high at 86.75, and the high yesterday was like 86. Um, we did not move away from the high. We did not since we did not move away from the high but didn't take it, we didn't see sellers stepping in and squeezing lower. Did not see that. We saw a relatively strong open, so we opened and we moved away from the opening price quite quickly, but still there was no follow through. There was a lot on offer between 84.75 and 85.50 with some size at 85, and it just kept reloading and reloading and reloading. And again, there was a long setup there from 83, and I just watched as the offers kept refreshing and refreshing and refreshing, and that was followed by a 2,500 contract market order to sweep for about 9 ticks down. We saw that big sweep, and then it came right back up to these prices around 83 again and sat sideways there. Very hard to decipher. It just seemed like there was a massive hedge that was being taken off, or a big selling order or something like that that was going on yesterday, causing the market to be locked. It felt like an option pinning type of behavior, where somebody's just is just executing a lot in front of the 4200. 4200, based on the overnight session, is only 7.5 points away from the high. And again, the big piece to take away from this is that it is not moving away. The overnight session shows what? It shows mid at 84.50, full session VWAP at 82 and a quarter, 83 and a quarter, so 84.50, 83 and a quarter, with the overnight point of control at 84 and a quarter. It just shifted up. Let me update my 84 and a quarter. It just shifted up, and so again, we have a completely balanced profile which is relatively Gaussian in nature. In other words, it's got a tail, it's got good kurtosis, and it's got a tail on the other side. This looks like something out of a statistics textbook. High kurtosis, high concentration, first standard deviation being right there. And so that's what we have overnight. This is another day where the market may be coiling and consolidating. However, it is Tuesday. There are a lot of earnings on the back end. You have Google, Microsoft, Starbucks, Verizon, AMD, and so on and so forth. There's likely to be some movement, and it just seems like the market is ready for the next leg up, but it is holding steady, holding steady in anticipation of two major things: huge tech releases, earnings releases this week. We had Tesla yesterday. It's not a tech; it's an automotive, but really it's a tech company, valuation of a tech company. And then we have the FOMC decision tomorrow. These things are likely to carry into today's action. I believe the FOMC conference begins today. So I don't have high hopes for wide range or higher volatility, but would be prepared given how we've built ourselves here. You look at the distribution from yesterday is overlapping the overnight distribution. This is really, really, really coiled. The volume is not there really, 120 1,000, and then yesterday was about 843,000 for the day session, or 837,000 for the day session, 988 for the full session. But really, we are holding on to these upper distributions, and you could see it's shifting upwards and sideways. So to me, I would not fade a breakout to the upside. I know people like to fade breakouts. This isn't an environment where I would do that. Last thing I want to do is, of course, review the big picture, because we want to keep track of what the other time frames are doing. And you could see again the same thing. You can see we're hanging on to this upper distribution. Hanging on to this upper distribution. We're above that 41.75 and held above the 41.75. This is likely to continue higher. If there were sellers, if we had sellers, or there's exhaustion at this point, we would have seen it come off. We would have seen this as any clue to anyone who's long that this thing is exhausted. There's a ton of long and hold type positions that would come off, and that would result in a large, 1.5, 2% day drop, and we're not seeing that. So expect higher prices. Let's move on and take a look at what's expected for today. So, as I said, not incredibly high expectations here. Not holding my breath for an amazing Tuesday, although Tuesdays hold the spot of the day with the highest volatility, statistically speaking. We're opening in this noise right here, VWAP, as I said, VWAP, full session VWAP, mid and the overnight point of control, with yesterday's point of control just underneath us. So it's a pretty noisy area, expecting immediate push on the open towards the 41.92 consolidation. I expect it to just bop around for a while, and then I'm looking for it to run into that 92.50 and push the all-time high and fall right back in on the close. The overnight low is relatively close to the overnight versus the overnight high. So the secondary scenario, which is the same kind of opportunity, is an open that pushes higher, consolidates, has an impulse down, and as soon as we break through this cluster that we've built overnight here, it'll be easy to tackle the 41.76 to make our way down into the 73 from yesterday, consolidate in this area, probably poke through, come back in, and finish somewhere in the middle, likely to finish somewhere in this acceptance zone. We're opening in range, in value. So there's not much of a change, but you have to lean on the fact that the trend is higher. And so we have to prioritize the upper scenario, the upper test scenario first. But I do expect that it's likely to be a two-way battle. No matter which way it goes, it's likely to be a two-way battle, just like we saw yesterday. I'm not seeing today too different. Um, too different than what we saw yesterday. Okay, that's all I have for you. And I'll leave you with it. Good luck today, and I'll catch you tomorrow morning. Take care.